I get to bring you all some good news, a glimmer of hope that maybe, just maybe, the bulls are back on Wall Street. Yesterday, the Dow shot up 379 points for its best day of the year. CBS News correspondent Priya David is at the New York Stock Exchange this morning. Good morning, Priya.
Maggie, good morning. The Dow, the Nasdaq, and the S&P 500 all posted strong gains yesterday, and overnight, Asian markets applauded. Japan's Nikkei index jumped 4.6% a day after posting a 26-year low. Hong Kong's Hang Seng index was also up. European markets haven't responded quite as positively, but here in the U.S., the futures are up this morning. Still, analysts caution this could be a bear market rally, a blip, rather than a sign of real recovery.
The bulls came out for a run on a relieved Wall Street yesterday.
We haven't seen this type of rally with this type of volume in quite a while.
The charge was led by an embattled bank Citigroup. Its stock rose nearly 40% after an internal memo from CEO Vikram Pandit claimed the company was profitable for the first 2 months of 2009 and that its capital position was, quote, strong. That capital bolstered by $45 billion in government bailout funds.
I don't think the problems are over for Citicorp, but for the first time in a while, I'm beginning to feel they may survive.
Also calming nerves, Federal Reserve Chair Ben Bernanke called for new regulatory rules and said the big banks will not be allowed to fail.
We must have a strategy that regulates the financial system as a whole, in a holistic way, not just at its individual components.
Analysts point out the market tends to turn a good 6 months before the rest of the economy, so even if there are sustained changes here, it could be a while before it's felt out there. Maggie, back to you in the studio.
CBS's Priya David, thank you. But is this the beginning of the end, at least? Liz Ann Saunders is Senior VP and Chief Investment Strategist at Charles Schwab. Good morning, Liz Ann.
Hi, Maggie.
So we had a rally.
Finally.
Let's not downplay that. That's great news. But we've seen rallies before, big rallies that are followed by even deeper dips. So what do you make of this?
Look, I mean, there's no reason not to be optimistic and at least cheer for at least a day. I think, though, that the market really was such a coiled spring. And in fact, history shows that some of the biggest rallies can come during bear markets. Now, again, I don't want to discount and take away from yesterday's move, but I think it's a little too soon to tell whether we're off to the races here.
Citigroup turning a profit was a big reason for the rally. Right. We should be very clear, this doesn't mean that this bank is out of the woods just yet. But the fact that Citigroup, such a beleaguered institution, turned a profit, that's
sure.
That's
and I think there has been some a little bit of good news that has crept into the market, but it hasn't been reacted positively by the market. I think the fact that the good news yesterday came from the financial sector just added a little bit more spark than what has been the case in some of these past rallies.
I was on Twitter last night, and John McCain sends a tweet that says, let's ask the president to veto the stimulus bill and take the pork out. Of course, we know the president will sign it. Do you think that that'll have an effect on the market?
I think it's more symbolic than anything else. I don't think there's any expectation that he won't sign it. So, no, I don't think from a market perspective that's a big deal.
All right, we'll see what happens. Thank you so much. Always good to have you.